All right, let's just jump right in. I mean, you can feel it, right? The crypto market is full of fear at the moment. After all that hype building up to the Bitcoin halving, we've kind of hit a wall, and sentiment is just in the gutter. But here's the thing. What if all this fear is actually hiding a massive, maybe even a generational opportunity? Let's break that down.
And really, this is the whole idea we're digging into. It's this powerful contrarian thought that says, hey, when everyone is freaking out, that's exactly where you should be looking. It might sound backward, but you know what? It's a strategy that has made people a lot of money over and over again in these markets. So what's the deal? What's the problem here? Well, think about it. The lead up to the Bitcoin halving was insane. I mean, there were billboards, it was all over the news, everybody was talking about it. So you had tons of new people jumping in, thinking, okay, here we go, rocket to the moon. And then, bam, a sell-off. And listen, this wasn't just some tiny little dip. We're talking about a nearly 15% drop from its all-time high. That's enough to shake anybody's confidence, right? It's got everyone asking, is that it? Is the bull run over? But before we can even think about what's next, we have to understand why it's happening in the first place. And really, it all comes down to two big things. First, there's the macroeconomic picture, the big money stuff. And second, it's about Bitcoin's own history, its own patterns. So let's tackle that first one and see how everything's connected. Okay, first things first, you have to get this. The big Wall Street types, they look at crypto as a risk-on asset. What does that mean? Just think of it like a hot tech stock. Yeah, it's got massive potential, but it's also super sensitive to what's happening in the wider economy. And that means its fate is kind of tied to what big players like the Federal Reserve decide to do. So here's how that actually works in the real world. For months, everyone was expecting like 3 to 5 interest rate cuts this year. And when interest rates go down, money gets cheaper, and investors get brave. They start throwing cash at riskier stuff, like crypto. But the story changed. Now we're maybe looking at just 1 or 2 cuts. And that little shift in expectations, it's like pouring cold water on the party, not just for stocks, but for crypto too. All right, so reason number 2 is, well, it's just history repeating itself. A dip after the halving is, believe it or not, totally normal. Seriously, we have seen this movie before, multiple times. Look at 2012, a 2-month flatline. 2016, we actually went down for a few months. Even in 2020, we had sell-offs before that epic run-up. So this dip we're seeing now, it's not a bug, it's a feature. It's just part of the cycle. Okay, so knowing all that, now we can start to shift how we look at this whole thing. Instead of just reacting to the fear of the moment, we can take a step back, put on our contrarian investor hat, and really look at the big picture. And look, it's super easy to get sucked into the fear, right? You open your portfolio, you see a sea of red. Of course you're going to feel worried. The headlines are all screaming doom and gloom, and all that fun and excitement from a few months ago, it's gone. But if you only focus on this little blip, you are missing the entire point. And here is the part you're missing. Just zoom out. Over the last year, Bitcoin is still up something like 400%. That 15% dip we're all worried about, it's just a little speed bump on a massive highway going up. Absolutely nothing that caused this incredible rally has fundamentally changed. Now, this is the really critical part. If you look at Bitcoin's price over its whole 15-year life on what's called a logarithmic chart, don't worry, that's just a fancy way of seeing long-term trends. You see something amazing. It follows this super predictable path. Yeah, it's a crazy roller coaster in the short term, but long term, the price just keeps bouncing up along the bottom of this growth channel. And based on that model, a target of $175,000 this cycle, it is still absolutely on the table. And that brings us to the main idea here. While Bitcoin is just kind of chilling, consolidating, doing its long-term thing, the real fireworks, the really explosive opportunity is starting to shift, and it's moving straight into the altcoin market. And don't just take my word for it. Look at the data. If you check out the total value of all altcoins, and we're talking about everything but Bitcoin and Ethereum here, you see this massive difference. Last cycle, it hit a peak of $1.2 trillion. Today, even with Bitcoin hanging out near its all-time high, the altcoin market is nowhere near that. There's a giant gap there just waiting to be filled. So what this tells us is there's a lag, a delayed reaction. The big money flows into Bitcoin first. Then, once Bitcoin settles down, that money starts looking for the next big thing, and it rotates into altcoins. If that pattern plays out again, we could see an absolutely mind-blowing $1.5 to $2 trillion pouring into altcoins. That would smash the old records.
So what's going to kick off this massive wave? A couple of key things, really. First, you can't ignore it. Meme coin culture is more powerful than ever. It's what gets everyday people excited and involved. But for that to happen, it has to be easy. Nobody wants to deal with complicated stuff. And that's where something like Coinbase's new base chain is a total game changer. It makes it super simple for their millions of users to jump in without those crazy high gas fees you see on Ethereum.
Okay, so with that idea in mind, that the next wave is all about easy-to-use platforms and meme culture, the analysis points to a few sleeping giants. These are projects that seem to fit the bill perfectly and could be the ones to catch this next wave. And here's a really simple way to think about it. Remember last cycle? Binance Smart Chain, or BSC, totally blew up, and the main place people traded on it, PancakeSwap, did a massive 25x. The theory now is that Coinbase's base chain could be this cycle's version of BSC, but potentially way bigger. So if that's true, then the million-dollar question is, what's this cycle's PancakeSwap? Which brings us to 3 specific projects that get highlighted. First up, sticking with that analogy, is Arrow. That's ticker ARO. Right now, it's the #1 place to trade on the base chain. So the bet is simple. If base ticks off like BSC did, Arrow could go right along with it. Next is IONET, or IO. This one's all about the AI craze. It's a decentralized network for GPU power, which is a huge deal for AI development. It's a giant of a project, and it's launching now, while the market is kind of quiet, which could be perfect timing. And finally, you've got Mode. This is a new layer 2 built on Optimism Superchain. The big thing with Mode is its tiny market cap. It's starting small, which means if it can get some traction and pull people in, it has a massive amount of room to grow. So what's the bottom line here? It's this. Yeah, fear is everywhere in the headlines. But if you look at the data, if you look at history, it's all pointing to a huge opportunity that might be bubbling just under the surface, especially in altcoins. The market's quiet right now. That's not a bad thing. That's the perfect time to do your homework and get prepared. So the real question isn't about the red on the screen today. It's, are you going to be ready for what comes next?